Do you want to be successful in buying stocks, successful in investing, successful in having money for the future in your retirement account? Well, you need two things. You need patience and you need discipline. You need discipline because you have to be consistent in reoccurring investment, meaning you have to put money in every single week or every month, but consistently for the next 5, 10, 20 years of your life. You need patience because stocks go up and they go down. And you have to be able to weather the storms that we have out there. Lots of crazy storms. People selling stocks for no reason, or because somebody tweeted, or because of war, or because of anything, assassination attempts, whatever. It brings down the stock market and sometimes it raises the stock market. I don't know all the ins and outs about why things sell and why things go higher, but what I do know is longevity. Time in the market works. So if you got 5 or 10, 20 years to buy stocks, you are good. If you're a beginner in the stock market, person that don't know anything about the stock market, your best bet is to buy index funds or ETFs and just ride out the storm until you become familiar with the stock market, right? Then you can go ahead and buy individual stocks. But if you're a beginner, you want to buy ETFs that are the same as the S&P 500, like the VOO or SPY. Any type of index fund that has the greatest 500 American companies in it, you want to buy. It's basically the same thing we buy in our 401ks. Lots of us have those 401ks. We don't realize what we're buying, but you're buying the S&P 500. You're buying mutual funds, you're buying 500 of the greatest companies. And all you're doing is just weathering the storm. You set it and forget it. You don't even pay attention to it. You just continue to buy consistently at your paycheck, not even realizing that you're buying the S&P 500. If you're doing it on your own, you don't have a 401k or Roth account, or any type of accounts set up right now, open up a brokerage account like a Roth IRA for retirement and just buy index funds. But you got to do it right now. You have to be consistent. You have to have discipline and you have to have patience because this year, a lot of stocks are going down. And like I said in my previous videos, you have to buy the dip. I don't care what nobody say. When that VIX, which is the volatility index, goes up to about 20 points or 20, 25, you need to be buying stocks. When people are scared and running for the hills and selling everything, you need to be buying stocks. I learned that over the years. It takes a lot of discipline, a lot of patience. It's not easy because when your money's involved, you get really, really emotional, right? But you can't let emotion guard what you want to do in life. You can't let emotion prevent what you want to do in life. If you want retirement, if you want a nice cushion when you get older, especially to my 40 and 50-year-old men out there, and females as well, if you're paying attention to the channel, but I mainly talk to my 9-to-5 brothers. You want retirement, you want consistent income, you got to be disciplined, you got to be patient. Warren Buffett didn't become a multi-billionaire until after he was 50 years old. Obviously, he was a billionaire before that, but after he turned 50, he became a multi-billionaire because of patience. And he just buys stocks and sit them for 20, 30 years. Can you do that? Can you consistently buy stocks and just set it and don't ever touch it again? It's not easy. It's very tough. It's not easy. It's very tough to sit on stocks when they go down and go up. And right now, a lot of your portfolios, including mine, there's red in there. There's a lot of red. But you have to be consistently buying stocks, especially on the dips. These stocks are on sale, man. Like all the great Magnificent Seven on sale, like Nvidia, even Broadcom is down, Apple is down, Microsoft is down, Nike continues to get hit. But everybody's wearing Nikes. I got on Nikes right now. You probably got on Nikes. That's a great long-term stock. You got to buy the dip, man. All these stocks are on sale. It's too late to get in oil. It's too late to get in defense funds because they already been running. So now you got to go back. Go back to the software stocks. Go back to the tech stocks. Go back to discretionary spending stocks. The stocks that are getting hit. They're going to rebound. And you're going to miss the dip, man. Like ServiceNow, Salesforce, you're going to miss the dip if you haven't bought them. Buy it right now. Celsius is down. Dutch Bros is down. Kava is still going, but when it goes down, you need to be buying it. Reddit is down. These are great companies. Uber is down. I'm giving you everything that you need to be buying. Airbnb. These are great companies. Do your research and buy these stocks. They're on sale. But for long term, Airbnb, Dutch Bros, Kava, Celsius, these are great long-term stocks that you want to buy right now. They're on sale, especially to my young men out 18, 20, 25 years old. You're talking about 20, 30 years before you can touch this stuff. You buy the stocks right now in the dip, you good. You are good. To my older gentlemen, men that my age, You want to go ahead and buy as much as you can right now because your income is about to stop when you retire or when you stop working. So you need to be buying stocks as much as you can right now while they're on sale. Now, obviously, we are going to go down even more. But what's happening is we've been oversold. So the S&P 500 has hit a stop right here. It's called a 200-day average, and it's going to bounce up a little bit. So right now the stock market is going down, but it's about to bounce up. It's been oversold. Come Monday, I'm telling you, I don't know what's going to happen over the weekend. There's going to be some tweets, some type of post out there that says the war is starting to end or whatever. Oil is going to retreat back. So the S&P 500 is going to bounce up, go up a little bit. It's going to sucker everybody in, but that's fine. Make your money. And then what's going to happen is going to bounce, hit up, and then it's going to go past that mark. It's going to go past that mark eventually. We are due for a real correction, but it's not going to happen yet. It's not going to happen next week. But just pay attention, stay focused, stay disciplined. For those who trade, pay attention to the S&P 500. It's currently oversold and it's hitting that 200-day average right here, and it's going to bounce up a little bit. It's going to bounce up for about a week. People are going to make a lot of money if you bought stocks during a downturn during this week when everything was getting hit. But it's ultimately, maybe next year, maybe the end of this year, it's going to pass that and go way down 10, 15, 20%. And you're going to be able to buy stocks even cheaper. But for now, continuously buy stocks, man, because nobody can time the market. We are due for correction, obviously. We have to have one. We haven't had one this year. I mean, 5%, maybe 3-5%, something like that. It hasn't really hurt us this year, so we are due. But you really can't pay attention to that. You got to buy stocks consistently. Discipline, patience, set it, forget it, and continuously buy stocks. I'm going to continue to say the same thing to my 9-to-5 brothers. Take your paycheck and use it as leverage to buy the dip in these stocks. Use it as leverage for long-term investing. I wish somebody would have told me this, and I'm telling you right now to be consistent. If you buy the stocks today, 2026, and continuously buy them until 2035, you're going to see a huge difference in your portfolio. I'm telling you, I've been in the market. I've been doing this, buying stocks for the last 5, almost 6 years. And if I look at some of my portfolios, they have went up. Now, obviously, I don't have much in them, but my portfolio has went up maybe 100%. Come on, that's crazy. You know what I'm saying? So consistently buy stocks. And I was able to pay off my car with one of my brokerage accounts, and I'm able to put some money to the side for my kids and everything. You got to be consistently buying stocks. Now I'm planning for retirement, to have extra retirement accounts. So I got a couple Roth IRA accounts that I'm going to continuously put money in it, even if it's just $25, $50. You got to be like that. You got to be consistent. Buy the stocks. Open up a brokerage account. To my beginning people, like I said earlier, buy those index funds. But before you do that, set up a brokerage account, a Roth IRA. You got to do it today. If you didn't do it January 1st, you still got time. You could put in $7,500 to $8,500 a year into your Roth IRA account, and it will be tax-free by the time you retire. Inside of your Roth IRA, you buy index funds. If you do not know what you're doing, you buy VOO for a broad index fund, or you could buy QQQ for the technology index fund that has the NASDAQ 100 stocks in there that are technology stocks for long term. If you want the total stock market, including everything, all the stocks, then you buy VTI. These are Vanguard ETFs. You want to consistently buy them in your portfolio. Do not get scared. Just continuously buy. If you can't take the heat, don't even look at your portfolio then if you can't take the heat. But I advise people to look at their portfolio every single day. I don't care what they say. I look at my portfolio every day because I don't want nobody going in and hacking. I don't want nobody taking my stock money or all my money. So I look at it every day. I don't care because I make moves every day. So if you don't want to do that, set it, forget it. Buy those index funds. Don't have to worry about it for 5, 10, 20 years. I'm just saying, you got to do it right now. You got to. Stocks on sale, buy the dip. When you buy the dip, trust me, the trajectory is like this. There may be some dips here and there, but the trajectory long-term, S&P 500 is going up. So take advantage of the stock market. Pay attention to your money. Like the channel, comment, subscribe, and keep it Econ 100, man. You already know.